Hi, this is Campbell Scott driving around Hamilton City. Welcome to my vlog. Well, the budget has been announced and I think most property investors will acknowledge it as being a good news budget. Certainly a much better budget than what the original tax working groups had proposed. They of course had proposed the introduction of capital gains taxes. They proposed the introduction of stamp duty both in and out, so buying and selling property, and they proposed the removal of the ability to offset losses from properties against taxes from other entities. None of those things have been implemented. Of course, it's not all sunshine and rainbows. We have lost the ability to claim depreciation on buildings, and we'll just talk about how you can mitigate or offset those cash flow losses now. The first thing, of course, is the marginal tax rates have been reduced considerably in the budget. Quite a generous reduction in the corporate rate from 33 to 28%, very competitive on a global scale. I think we will see property investors purchasing new properties in corporate entities, perhaps company structures owned by trusts. We'll probably see a lot of transferring of assets from existing entities into company entities. If you are transferring properties at the moment, or if you are selling properties at the moment, of course you can write the book value into your sale and purchase agreements. There is now no negative impact on the purchaser for doing that because they can't claim the depreciation anyway, so make sure you are writing those book values into your agreements. Also on this site, on the downloads tab on the left hand side of the screen, I've added a file there where you can calculate the impact of the marginal tax rates on your annual income, and you can also factor in the impact of being unable to claim the depreciation on your building. So jump on there and see what the cash flow difference actually is. I think you might be quite surprised. In addition to the tax rates, of course, we can still claim chattels or depreciation on chattels. If you're not doing this already, make sure you're getting chattels valuations done at least annually. You'll be surprised how they can positively impact your tax outcome at the end of the year, so make sure you are claiming those to the full extent of the law. And thirdly, of course, rents. They're under huge pressure to increase anyway because of the massive amount of demand for good properties compared to the limited supply of rental properties available. I think tenants are expecting rents to go up as a result of the budget, and we've never had a better excuse. So make sure you're getting out there and increasing your rents. Even if it's only $10 or $15 a week, it makes a big impact, a big effect on your cash flow, and will go a long way towards offsetting the losses suffered from being unable to claim depreciation on buildings. So it's not all bad news. I think a lot of property investors will be better off as a result of the budget announcement. The media I see already are suggesting that house prices are going to decline by 5 to 10%. I really can't see how that's going to happen, not in light of the fact that depreciation is only 3% on buildings anyway. Buildings only account for about 2/3 of the value of the property typically. I just can't see how it's going to happen, particularly when you factor in all of these other opportunities that we have to offset those losses. So get out there, get amongst it. It is a great buying market. It's the best buying market we have seen, I think, for probably some 10 years. There's a lot of properties to choose from. There's not a lot of buyer competition. We've still got healthy interest rates, and as we just said before, huge demand from tenants for good properties. If you've put these things into place and you realise that you do have some insolvency issues as a result of the budget, I'd be grateful of the opportunity to help you move properties out of your portfolio and to effect the sale for those. If there's anything that I can do to help, I'd be grateful of that opportunity. My details on campbellscott.com. This is Campbell Scott. I look forward to talking to you soon. Thanks very much.